Good day to everyone joining us from around the world. Whether you're just waking up, midway through your trading session, or winding down for the night, welcome. On behalf of the entire WeMasterTrade team, we are truly pleased to have you here with us for the global live stream session. My name is Vincent, and I will be guiding you through this exciting 2-hour journey as your host. Today's live stream is not just a presentation, it's a conversation. It's a window into the engine room of one of the most fast-growing and forward-thinking funded trading firms in the industry. And of course, I'm not here alone. I'm joined by two remarkable guests who have shaped what WeMasterTrade represents today. Skilled trader, mentors, and role models within our community. First, let me introduce the ever-composed, always insightful, Hidden. Welcome, Hidden.
Thank you so much, Vincent. Hello, everyone, and thank you for spending your time with us. I'm truly looking forward for today's session.
Is managing your personal
Much
finances.
to cover, not just about trading strategy or rules, but about the full ecosystem that WeMasterTrade offers, from how you start, how you grow, to how you earn. This is the kind of platform that doesn't just fund trades, it builds traders.
Absolutely. And next to him is someone who brings sharp analysis and clarity to every chart and conversation. He's strategic, he's sharp, and he's a real force in our trading space. Please welcome Raf.
Thank you, Vincent, and hello to everyone in the chat. I'm genuinely thrilled to be here. What excites me most about today is that we are going to unpack everything, not just what we WeMasterTrade offer, but how traders can truly take advantage of each part of our system, from packages to promotions to scaling and long-term profit sharing. If you have ever had questions or even doubt, today is the day to ask them.
And that's exactly what we are here for. Whether you're just brand new to WeMasterTrade or already a part of our funded trader program, today's live stream is going to give you the full picture, not just the highlight view. Over the course of the session, we are going to walk you through what WeMasterTrade truly is, what we believe in, how our programs are designed, and why we are doing things differently from traditional brokers or platforms. Now, I want to be clear. This isn't about sales. This is about understanding. We want you to know what you are signing up for, what kind of structure support your journey, and how you can use that structure to not just succeed, but scale.
And speaking of structure, we will begin by sharing the story behind WeMasterTrade, how we were formed as a funded project and not a broker, which is a very important distinction. Unlike brokers who profit from volumes or loss, WeMasterTrade is built on the belief that your success is our success. We invest capital in traders, cover the risk for them, and share profits only when you do well. That's the foundation.
Exactly, and from that philosophy flows everything we offer, especially our trading packages, which we will be discussing in details. We'll explain the logic behind each one, what kind of traders they ever looked at our packages and thought, which one is right for me. Today we'll answer that.
And more than that, we will also do a live comparisons in between packages. We will be breaking down pricing, account size, maximum drawdowns, consistency rule, and even payouts, side by side, to help you make a fully informed decision. It's one thing to see numbers on a website, it's another thing to understand the intention behind them.
Right, and once you understand the packages, the next question is always how do I stay compliant while trading? So we will move naturally into discussing trading rules, which honestly is one of the most important parts of today's session. We will explain what the daily loss limit is, how it's calculated, why it includes both closed and floating profit and loss, and how to avoid violating it, especially overnight. We will go into the maximum total loss, the consistency ratio, and we will even address common misunderstanding about trade sizing and risk per trade policies.
And we won't just explain rules in isolations, we'll explain them in the context of live trading decisions. I will share some personal examples of mistakes I made when I first started trading under funded conditions and how I adjusted. Because rules aren't meant to restrict you, they are to protect the integrity of your growth.
And while we are on the topic of helping you succeed, we'll be guiding you through our current promotion plan, including limited time discount codes, trader support campaigns, capital opportunities, and how to properly qualify and submit proof. We've had some amazing response to our promotions, but also some confusion. So we will be showing you exactly what to do, step by step.
From there, we will transition into a discussion on our scale plan, which I personally think is one of the most underrated part of WeMasterTrade offering. Many people don't realize this, but we have a structured growth pathway in line. And if you perform well consistently, you don't just get payout, you actually unlock higher capital tiers. It's not just about getting funded once, it's about evolving into a six-figure funded trader.
And speaking of growth, one of the most powerful ways to build long-term incomes at WeMasterTrade is through our profit-sharing model. This is the heart of what we make different from the other programs. When you trade on a funded account and generate profits without breaking rules, we share that profit with you up to 90%. But there is more to it than just the percentage. We explain the full payout cycle, threshold, and the timeline today.
Now, I know many of you watching today aren't just traders. You are also educators, influencers, or people with large networks. That's why we are also taking time to explain our affiliate program, and we'll do it transparently. We'll walk you through how commissions are calculated, how affiliate referrals are tracked, and more importantly, what you need to qualify for payout, including a detailed explanation of the two referee rule and minimum funding conditions.
This is especially important because we want all of our partners to feel confident and clear about their earnings. We have seen a huge growth in affiliate activity recently, and we want to ensure everyone is promoting responsibly, understanding the term, and building long-term income streams.
So, as you can tell, this is not just a surface level live stream. We are diving into everything: packages, rules, promos, scale paths, profit sharing, and affiliate opportunities, all with one purpose in mind: helping you make the most informed, empowered, and confident decision possible.
And we want this to be interactive, not just informative. So if you have questions at any point, please drop it in the chat. Our moderators are watching and we will answer as many questions as we can. Your voice matters.
And if you are watching this on replay, don't worry, we will leave timestamp and summary below. And you can always reach out to our team with any follow-up inquiries. Our support team is incredible and they really care about helping traders succeed.
To wrap up this welcome, I would like to say this: WeMasterTrade is not just a platform, it's a commitment. A commitment to be real traders, to create fair, structured, and scalable pathways for people around the world who are serious about trading as a profession, not a game. So, if you are here to grow, to understand, and to take action, you are exactly where you need to be. Let's dive into the journey together. Let's begin, and once again, welcome to the WeMasterTrade live stream. Now, before we dive into packages, trading rules, and promotional mechanics, we want to take a moment to zoom out and offer you the full picture of who WeMasterTrade really is, what we believe in, and why we have built this platform the way we have. Because when you are putting your trust and your trading into a company, understanding its philosophy isn't just helpful, is essential. And so, this assessment is about origin, intention, and impact. It's about how WeMasterTrade began, what values underpin the firm, and how those values translate into real tools and outcomes for traders like you. And to walk through that, I'm joined as always by two people who live and breathe the principle, Hayden and Raf. Let's start at the beginning.
Thanks, Vincent. To truly understand WeMasterTrade, we need to understand why it was created. Unlike many pro firms or brokers that evolve from traditional financial institutions, WeMasterTrade was born with a purpose-driven mission to give capable traders access to capital regardless of their background, locations, and financial situations. We were founded in 2022 as part of WeCopyTrade Group, headquartered in Vancouver, Canada. While WeCopyTrade is built its name on signal sharing, investor networks, and copy trading tech, WeMasterTrade was designed to serve more focused visions to identify, support, and scale high potential traders, giving them a pathway to earn professionally without risking their own savings.
And it's important to note WeMasterTrade is not a broker. That's not just a label, it is a fundamental difference. We don't profit from spreads or commissions. Our success is directly tied to the success of our traders. That's why everything we have built, from our instant funding packages to our profit sharing model, is structured with alignment in mind. We take on the capital risk, we give you the roadmap, and you bring the skills. But we also know that skill alone isn't enough, which is why one of our founding principles is education first. We don't want traders to blindly follow rules, we want them to understand the logic behind the structures. That's why we have invested heavily into WeMasterTrade Academy, a training ecosystem built to take you from beginner to consistently funded professional.
And that academy is something special, with courses ranging from introductory trading psychology all the way to advanced risk calibration and multi-asset strategy design. The WeMasterTrade Academy isn't just about the theory, it's about implementation. We've designed a curriculum to match the real-world trading environment within WeMasterTrade. So what you learn, you can apply directly to your funded account. And to ensure that our system and content meet global standards, WeMasterTrade is proud to hold an ISO 21001-2018 certification, which confirms that our educational products and traders development programs meet rigorous international criteria for quality, structural, and learner engagement.
That certification is a big deal because it shows our long-term commitment to developing traders, not just collecting fees. In an industry where many so-called pro firms come and go, WeMasterTrade has positioned itself with real opportunity, stability, compliance frameworks, and internal accountability. We are not here for a season, we are here to help build careers.
We have seen that commitment translate into real stories. If you visit our testimonial page, you will find traders from Nigeria, Vietnam, Canada, the Philippines, South Africa, all are talking about how WeMasterTrade help them not just earn more, but trade with purpose. They talk about passing challenges after years of struggling with retail brokers. They talk about finally being able to trade without the emotional burden of risking personal funds. We have students become full-time traders, we have women re-enter the finance world after career breaks, and we had young professionals from underbanked regions find access to the market with a funded account. That's the impact, and that's what drives us.
And it doesn't stop there. The WeMasterTrade ecosystem is designed to grow with you. For those who want to stay engaged and up to date, we maintain a regularly updated blog section where our team of experts and educators share quickly insights, trading psychology breakdowns, market reaction, and platform updates. We believe that learning never ends, and we keep our traders informed. But let's talk about culture. What makes WeMasterTrade different isn't just the product offering, it's the community mindset. We actively promote trader integrity, respectful competition, and knowledge sharing. Whether you are in a Telegram group, watching our YouTube series, or engaging with us on a live support, you will see that we actually listen.
And I will speak honestly here. In many platforms, the trader is just a customer. At WeMasterTrade, the trader is a product. Your performance drives the business. Your voice shapes the platforms, and your consistency determines how far we can scale together. That mutual accountability is rare, and is something we are proud of.
And if you are ever doubted whether this path is real, whether a trading career is truly within reach, I encourage you to read the testimonial, take a look at our funding accounts, and connect with people who have gone through the system. The stories are real, the capital is real, and the results speak for themselves.
To summarize, WeMasterTrade is a capital allocator, a talent accelerator, and an education-first trading institution. We are here to challenge the status quo of trading access, to build systems that reward performance over promotion, and to create real, scalable income opportunities for traders around the world, regardless of their starting point. This is more than a platform; it's a trading movement. And if you are ready to be a part of it, today's live stream will show you everything you need to know. Thank you, Hayden and Raf, for that deep and honest walkthrough. Coming up next, we are going to take this foundation and connect it directly to our actual offering. That means we'll be discussing all the different account packages available at WeMasterTrade, how they differ, who they are designed for, and what kind of results you can expect from each. Now that we have explored who WeMasterTrade and the principle we stand for, it's time to move into one of the most essential parts of this live stream, an in-depth discussion on our account packages. This is where it all begins for most traders, choosing the structure that best aligns with their goals, their style, and their current skill level. And when we say packages, we are not just talking about dollar figures. We are talking about frameworks. Each package at WeMasterTrade represents a different pathway toward growth. And today, we will walk you through all of them, what they offer, how they are structured, and most importantly, who they are designed for.
Exactly, MC. At WeMasterTrade, we don't believe in a one-size-fits-all model. That's why we have built two distinct product lines for traders, the Challenger packages and the Instant Funding packages. Each line includes a variety of account size and configurations because we know that traders come with different strengths, risk appetites, and timelines.
So let's begin with the challenge model, a two-phase evaluation system built for traders who want to prove their skill before being allocated capital. It's structured, fair, and has become the most popular route for new traders entering the WeMasterTrade ecosystem.
In the challenges model, you begin with a simulated account and your goal is to meet specific profit targets while staying within strict but reasonable risk parameters. There are three stages in total, phase 1, phase 2, and then funded stage.
Take for instance our 10,000 challenge, a great starting point for traders who want to minimize upfront costs while building a track record. Let's break it down phase by phase.
In phase 1, you will need to achieve an 8% profit target, which is $800 without reaching a 5% daily loss or a 10% overall loss limit. That means $1,000. You will have unlimited times to achieve this. That is the key difference from many platforms. We don't pressure you with deadlines.
So once you pass phase 1, you will move into phase 2, where your profit target drops to 6%, which is $600. The risk rule remains the same, and here's something unique. In phase 2, you already start receiving a 30% profit share if you exceed the target.
Finally, once both phases are clear, you enter the funded account where you trade with real capital, have no profit targets, and your profit share jump to 90%. That's one of the highest in the industry.
So who is the 10,000 challenge best for? This account is ideal for newer traders or experienced traders who want to start with lower pressure and learn the system. You are still refining your strategies or want to get a feel for WeMasterTrade risk framework before scaling? This is the perfect package to begin with.
Now, for those who are confident in their strategy and want to start with a larger account size, we offer 25,000, 50,000, and 100,000 challenge packages. The structure is similar. 2 phases, the same 5% daily and 10% total loss limit, but the profit targets scale proportionally.
For example, in the $50,000 challenges, you will need to hit $4,000 in phase 1 and $3,000 in phase 2. While the targets are higher, the leverage remains the same, 1 and 100, giving you room to adjust position sizing.
So who are the mid and high tier challenge best for? The 25 to 100,000 challenges are ideal for traders with more capital management experience, especially those looking to eventually scale into larger funding accounts. And if you have already passed all the broad challenges or have strong verified trading history, this is a good step up.
Every challenge package comes with a one-time fee. For example, just $45 for the $10,000 challenge. This fee is refundable once you become funded and meet minimum performance condition. And if things go your way, you are eligible for a 30% reset discount to start fresh. What if you don't want to go through a challenge at all, but instead want to access real capital immediately and get paid based purely on results? That's where our instant funding packages come into play.
And this is where WeMasterTrade truly set itself apart. Our instant funding model is designed to give experienced discerning traders the chance to real capital from day one. No evaluation, no demo stages, just pure live trading backed by a structured, fair and transparent system.
And what makes it even more accessible is that you can choose from several different account types, depending on your style, preference, and goals. Today we are going to walk you through each of the Live main instant funding packages: standard, 51010, 5100, 5110 no PCs, and customized. We'll compare the details, but more importantly, we will help you figure out which package is right for you.
Let me set the scene quickly. All of our instant funding packages give you live trading access from day one. That means no challenge phases, no evaluations. You pay once, follow the rules, and you are trading live capital. And every account, no matter the size, includes no time limit, up to 90% profit share, scale up plan toward $1 million, support for EAs, swing trades, scalping, and even NFT. Now, let's go package by package. And as we go, hidden, rough, I want you to jump in with real advice. Who should actually choose which one, and what kind of traders you have seen success with each.
Let's start with the standard packages. I always describe this one as the best friend for traders who just want stability. You are getting up to $200,000 in capital, which are very manageable 4% daily loss limit and 6% overall limits.
It's like that calm, steady account that doesn't push you to overtrade. And with the profit split up to 90%, there's serious earning potential even if you are taking a slow and steady approach.
And how about commission?
Competitive across the board. Forex at $4 per lot, gold at $4 per lot, indies at $0.5, and stocks at just $0.07 per lot.
And everything is allowed. There's trading, scalping, weekend holding, EAs, HFT, you name it.
So for the audience, if you are someone who trades regularly, understanding your strategy, wanting a full range of assets, and plan to play the long game, this is your sweet spot.
And who's it for? It's perfect for intermediate to advanced traders who already know their edge but don't want to stress with a target-based challenge. And if you have ever had an account blow due to unrealistic rule, you'll find the standard model refreshingly fair.
I would also say it suits swing traders. The 4 and 6 percentage risk profile give just enough flexibility to hold multi-day positions, especially with weekend holding fully allowed.
Alright, moving up a gear, let's talk about the 5-10-10 package. Same capital ceiling, up to 200,000, but you now get 5% daily loss and a wider 10% overall limit. Why does that matter?
That execution is massive for traders who scale into position or take multiple entries per setup. You got more room to breathe, especially in high volatility markets.
And the profit target here is also 10%, which aligns well with the risk window. Plus, you still get full support for scalping, EAs, new trading is very trader friendly.
So this is best for day traders, especially those trading assets like NAS, DAQ or gold that move fast. If you got a tested intraday strategies and just need some risk breathing room, this is your package.
And also for traders who want structure but don't mind having that profit target. The clear milestone motivates some people, especially if they are payout oriented.
Now here's a personal favorite, the 5-10-0. You get 5% daily and 10% overall loss, but no profit target. None, zero.
And that's the blessing for high precision traders. You are no longer chasing a number, you just focus on protecting equity and growing capital slowly and safely.
This one is loved by low frequency traders and snipers. If you enter 3 to 5 traders a week, this is your place. You are not penalized for patience, you are actually awarded from it.
For instance, swing traders, risk-conscious traders, people who prioritize consistency over speed. If that's you, you will trip here.
And let's be honest, not everyone wants to hit target. Some just want to trade well and scale cleanly. This is their home.
Now for the rule breaker, or rather, those who don't want to be evaluated on how even their profits are. The 5-10-10 no BC remove profits consistency tracking, right?
Exactly, same 5/10 risk profile, but you are not required to keep your profit roll smooth.
That's it. The trade copies are not allowed in this one, so it's for manual traders only, and you need to trade responsibility. But for aggressive traders who sometimes hit big spikes, this is the place.
So who is for? It's perfect for high risk, high reward traders or anyone who had issue with consistency rule as order form. You trade how you want, just keep it inside the drawer box.
And last but not least, the customized package. This is WeMasterTrade saying, you know what you need, let's build it together.
You can adjust daily loss overall loss to your liking. Plus, you can fund up to $400,000 more than any other account.
So it's premium, flexible and come with on trading style allowed, including EAs, neo trading, weekend holding, HFT and more. And who is for? Top tier professional as hedge fund traders, signal providers, high volume traders, anyone with a very specific structure in mind, this package lets you build it.
I always say, if you have tried other model and nothing quite fits, build your own blueprints with customized. That freedom is rare.
To sum up, Every instant funding package we offer comes with a clear risk parameter, fair commission, deep market access, and real profit potential. There are no time limits, and payouts start as early as 1 day in.
And no matter your strategy, scalping, swing, angle, or manual, there's an account that aligns with you. The key is picking the right one now, so you can start building consistency from the start.
And if you are ever unsure, our team is available 24/7 to guide you. But the real secret, pick the account that fits your discipline, not your dreams. The right fit always outperforms the biggest promise.
Up next, we will walk you through exactly how to protect your account, avoid breaches, and understand the key risks and consistency rules that power our entire platform. Alright traders, now that you have seen the packages, let's talk about the part that either makes or break your account. That's right, it's time to dig into the trading rules and how to actually stay compliant once you are funded. Because let's be honest, getting funded is exciting, but staying funded, that's where the game really begins. And the number one reason traders lose their account, it comes down to one thing, the daily loss limit.
Yes, the dreaded daily loss is the one rule traders think they understand until it kicks them out of their account at 3:70 p.m. on a random Tuesday.
But here's the good news. Once you understand how it works, it's really works. It's become one of the best tools for risk control. So today, let's break it down from top to bottom.
So what is the daily loss limit, also called maximum daily loss?
It's the maximum amount of loss you are allowed to incur in both floating and closed trades, or any single trading day. If your equity falls below that limit, even for a moment, your account is automatically closed.
And the key thing here is the daily loss is calculated from the higher of either your balance or your equity at the start of the trading day. That's a really important distinction, and it's what trips a lot of people up.
Let's work through a live example. Imagine it's the start of day 5. Your balance is 105,000. Your equity, however, is higher, 107,000, because of open floating profit.
If you are on a 4% daily loss limit, we calculate it off the higher number, $107,000.
So 4% of 107,000 is around 4,000. That means your equity for the rest of the day can't drop below 102,000 or boom, the account is gone.
Right. And I think it's important to point this out. The system isn't waiting for a close. It's real time. Even if your trade is floating loss and you haven't closed it yet, if your equity dips below that threshold for even a second, that's it.
So now let's reverse it. Say it's the start of day 7, your balance is 100,000 but your equity is $99,000 because your open trades are slightly in loss.
Since the balance is higher, we base the 4% on the initial balance, so that's $4,000.
So now your equity must stay above 96,000 throughout the day. If it drops to 95,999, auto liquidation kicks in. No warning, no margin call.
So what happens if you break it? The system will send a market order to all close on trades. Everything liquidate, your account is disabled and you can't trade again unless you purchase a new package.
And here's the kicker. The auto close happens when the system detects and the threshold was crossed. But due to market fluctuations, the final P&L might look worse than the actual threshold. That's because the system executes a closure based on price slippage at the time of liquidations.
So even if you only intended to take a 3,900 loss, one slippage spiking goal or NASDAQ, and suddenly it's 4,200. That's why we say don't ride the edge.
Alright, let's talk about how to avoid violating this rule because this is where the pro mindset kicks in.
First tip, Know your buffer. Never plan trades to take you right up to the edge of your limit. Leave at least 10 to 15% room below the max loss, especially in volatile markets.
Tip 2. Check your equity, not your balance. I can't stress this enough. Most traders stare at their balance all day, but if your floating loss is dragging your equity, you are heading toward a violation.
Tip 3. Use a dashboard or tracker. Inside WeMasterTrade, we provide rich dashboard that show your live loss status. Use them, check them. Don't rely on memory.
Also, pause trading after a big loss early in the day. If you have lost 3% in the first hours of London sessions, maybe it's time to stop and reflect, not try to revenge trade your way back up.
Another big one, trade smaller during news hour. If you are trading gold during an FB with full loss size, you are practically begging to break the daily loss rule. Cut position size and rise past volatility.
What are the top rookie mistakes you see when it comes to daily loss?
Number 1. Over leveraging. Traders opening positions that are 5, 6, and 7% in their account thinking they will all close quickly. But if the trade turns red fast, it's already too late.
Number 2. Holding overnight without checking exposure. If you hold 3 trades overnight and wake up to a 60 bip gap, the daily loss could be hit before you even open your eyes.
And the third, assuming that close trade are all that matter. They are not. Remember, equity includes both floating and closed position. The total of equity lies is your score.
I always say this to new traders: the daily loss rule isn't your enemy, it's your account airbag. It's designed to protect you from doing something irreversible.
Exactly, it forces discipline. You can be aggressive, but only within the box, and if you learn to trade inside the box, you will last longer than 90% of the market.
And one last note, this isn't about rules, it's about trust. WeMasterTrade funds you because we trust that you manage risk responsibly. The daily loss is there to protect that trust on both sides. Welcome back traders. In the reverse section, we cover the daily loss rule, and if you haven't already clipped that one, you are missing out. But now we move from the daily boundary to the absolute boundary. I'm talking about the maximum loss rule, also known as your account stop loss. The line that can be crossed, not just for the day, but for the entire life of your account.
This is where a lot of traders misunderstand how the rule works. They think, well, I didn't hit my daily limit, so I'm fine. But then a week later, they are chipped always at their account and suddenly liquidations.
The max loss rule is the last safety net. If the daily loss is your daily spell, then max loss is your airbag. If the limit is hit, it means the account is deemed unsalvageable under your current trajectory and is closed immediately.
So what exactly is the max loss rule? Let's define it simply. It's the total maximum amount you are allowed to lose across all trades for the entire account. If your equity, that is your real capital time, including open trades, ever drops below a certain percentage of your starting balance, your account is gone. Period.
And unlike the daily loss which resets every day, this one doesn't reset, it's cumulative. You can lose 2% one day, 3% the next, and if your total loss crosses the line, that is.
And the percentage limit depends on your package. It's typically either 6% or 10% of your initial balance. Not your equity, not your profit, but the original number you started with.
Let's walk through a concrete example. Suppose you have an instant funding account with an initial balance of 55,000, and your max loss is 6%, which is 3,000.
That means your equity can never go below $47,000 ever. Doesn't matter if you made $1,000 yesterday, the total loss from your highest points break down to that threshold is what matters.
And remember, this rule includes both closed losses and floating losses. So if you have lost 2,000 in closed trade and you have another 1,200 floating red, your equity is now at 46,800. That's below the limit. Account is closed.
And just to be clear, it's not about the net gain or loss across trades. It's about where your equity stands in real time, relative to that stop loss floor.
Um, so when you are in profit, so here's where it get interesting and a little tricky. Let's say your account grew to $51,000. Congrats, you are in profit.
But your max loss limit is still based on your original 50,000 starting balance. So if your limit is 6%, the threshold is still at 47,000. What changes is how much room you have to fund before you need it.
Exactly. You now have 4,000 in total buffer because 51,000 minus 47,000 equals 4,000. So your profits give you cushion, but the floor never moves.
So what happens when you break it? Once your equity drops below that maximum loss threshold, even by a few dollars, auto liquidation triggers. All trades are closed immediately at market price.
And again, like with the daily loss, if there's volatility or slippage, your account might close out below that line. That's just execution reality.
And most importantly, once it's breached, that account is permanently disabled. You will need to purchase a new package if you want to continue trading. No resets, no rollbacks.
So here's some pro tips to stay within the maximum loss rule. Alright, let's get tactical. How do you actually trade inside this rule without constantly worrying about it?
First, track your total close loss every day. You should always know how close you are to your market loss floor. Don't wait for the dashboard warning. Calculate it manually.
Second, use your profit as protection, not permissions. Don't choose floating profit as a green light to increase risk. Instead, consider locking in gains by reducing loss size when you are ahead.
Third, manage your floating loss aggressively. Even if you are positive overall, a single trade with poor stop placement can take you from safety to shut out in a few minutes.
4. Stay cool when you are close. If you are down 5% out of your 6% limit, that's not the time to double down. That's the time to step away, pause, and rethink your entries.
So, common mistake that trigger mass loss. The biggest mistake, underestimating floating drawdown. Traders close 3 loser and think, okay, I still got more room. But they forget about the 4 trade floating minus 1800.
Second, traders who chase recovery after a bad day. They lose 4% in one day, come back swinging at the next day thinking they will make it back, and instead take out another 2%, boom, violations.
Third, and this one's hard, ignoring slippage during major news. Even with a tight stop, new candles can get you straight through your limit.
The max loss rules is there for the reason. It's not there to punish you, it's there to protect you from yourself. Every successful trader I know sees their stop loss, whether personal and institutional, are a non-negotiable boundary.
Right, is a reality check. If you are consistently pushing up against your max loss, the problem isn't the rule. The problem is your system or your psychology.
At WeMasterTrade, we are not just giving capital, we are teaching structure. And the max loss rule is what separates gambler from professional. So remember, your max loss is a percentage of your starting balance, typically 6% or 10%. It's calculated using equity, not balance. Include both close and floating losses, and once breached, your account is gone. Coming up next, we will allow the consistency rule and why steady profit matter more than big spike when it comes to growing, scaling, and getting paid.
So if you ever made 5,000 in one day, then made 200 in the next 4 days and wonder why your payout got flat, this next segment is for you.
Let's deep into the reason of profitability and how to stay consistent under the WeMasterTrade model.
Alright, before we continue to the next profit consistency rule, we will take in a short break and then we'll come back later. Welcome back, traders. Now that we have talked about the daily loss limit and we just covered the maximum loss rule, two pillars about protecting your capital. But now it's time to shift gear just a little and talk not about risk but about result. Because here's the thing, it's not just about staying alive in the game. At WeMasterTrade, we want to see traders grow, scale, and actually earn. And to do that, you need more than just a winning day. You need something called profit consistency.
This rule right here, the profit consistency rule, is what separates a lucky spy from a reliable trader. It tells us whether you can make money over time or you are just hoping to hit one big winner and roll the dice.
And more importantly, it's also how we evaluate if a trader is eligible for withdrawal, profit sharing, and even scale up. So if you are funded and you are wondering why your payout didn't go through, this rule could be the reason.
So let's define it clearly. The profit consistency ratio is a measure of how even your profits are from day to day. The more balanced your profit, the lower your ratio. The less consistent, meaning you had one giant profit day and then smaller or losing days, the higher your ratio.
The idea is simple. If 80% of your total profits came from one day, that's not consistency, that's a luck or risk. What we want to see is traders who make profit day after day, even if it's small. That's what we can scale.
So how is it calculated? The formula is really straightforward. Take your best trading day's profit and divide it by your overall profit since you started the account, then multiply by 100.
Best day divided by total profit multiplied by 100 equal profit consistency percentage.
And just to be clear, best day refers to your highest close profits in a single calendar day, and total profit is the sum of all your close profits minus any close focus, minus any close losses or open losses across the lines of the account.
So let's say you had the following result over 5 trading days. Day 1, $100, day 2, $200, day 3, minus 50, day 4, 100, and day 5, $60.
That means your total net profits across 5 days is $100 plus $200 minus $50 plus $100 plus $60 equal to $410.
And your best day was day 2. That's $200 profit.
So now we apply the formula 200 divided by $410 equal to 0.4878. Multiply that by 100 and you get a profit consistency ratio of 48.78%.
Now let's say your account requires 20% profit consistency, which is common. This trader is way above that, so they wouldn't qualify for a payout yet.
So even though this trader is profitable, they are not consistent enough. They had one big day that made up almost half of their total profit. That's not sustainable, and that's what we are looking at.
And this is where I really want to speak to traders. If you are relying on one or two big days to carry your entire account, that's not professional trading, that's volatility. You can get lucky, but you won't stay funded.
And remember, it's not just about your payout this week. WeMasterTrade evaluate your consistency over time. Traders who show long-term balance are the ones who get scaled up, who get features, who get trusted with more capital.
Alright, so let's address the numbers. What's an acceptable profit consistency ratio?
Typically, the rule is set at 20%. That means your best day should not exceed 20% of your overall profit. So, how to improve your consistency? Let's say you are over the limit. Don't panic. You are not disqualified. You just need to keep trading and even out the curve.
Here's how to do that. Trade smaller size for a few days. Second, take smaller controlled wins. aim for $200 and $300 for each days. The third is avoid big swing trades that could spike your ratio again. And the last, spread profits across multiple days in one monster setup.
And for those using EAs, monitor your equity curve. If your EA is skewing profits heavily into one day, you might need to rebalance it. The bot may be profitable, but it won't pass this rule unless it's configured with buyout logic in mind.
Here is some common mistake to avoid. Mistake number 1. Traders hitting target early, then taking the rest of the week off. That inflate your best day and leave the rest of your curve flat.
A second mistake, overtrading after a big day, thinking I'm safe now, and trying to squeeze more instead of averaging on that high ratio.
Mistake number 3, thinking this rule is just a hurdle. It's not. It's a reflection of what we actually look for in our WeMasterTrade.
At the end of the day, this isn't about controlling you. It's about building habits that can handle scale. If you can be consistent with $25,000, what happens when we give you $100,000 or more?
Exactly, consistency is what makes you safe to invest in. At WeMasterTrade, we fund traders, but we also study them. This rule tells us whether you are serious about long-term trading.
And we have seen it time and time again. The traders who respect this rule, they are the ones who get multiple payouts, referrals, and grow into six-figure friendly accounts.
So don't fear the rule. Understand it, use it as a feedback tool. If your ratio is too high, great, that means you got profit. Now keep going and balance it out.
And remember, you don't need to calculate it manually. WeMasterTrade dashboard calculates your profit consistency ratio automatically. You can check it anytime under your statistics tab.
To recap, this rule is about balance, not volume. Aim to keep your best day under 20% of your total profit. Spread your wins across multiple sessions, and monitor your progress in the dashboard. We have walked through the daily loss limits, tackle the maximum account loss, and examine how your profit consistency save your long-term payout and growth. And now we arrive at the final, and perhaps most overlooked rule of all. The risk consistency rule, or what we call the discipline test.
That's right. The traders often think the biggest enemy is the markets, but truthfully, it's inconsistent, especially in how much you are risking from one trade to the next.
This rule doesn't look at how often you win, it looks at how stable your risk is and how professionally you are managing your position sizing. And if you are serious about scaling at WeMasterTrade, this rule is non-negotiable.
So what is the risk consistency rule? Let's break it down. At its core, the risk consistency rule is simple. You are not allowed to risk more than 2% of your initial account balance on any single trade idea.
And that includes all loss associated with that trade idea, both closed losses and floating losses. Even fees, commissions, and swap are counted.
And for some accounts like the 5-10-10 OBC package, this rule gets even stricter. There, the limit is 1% per trade idea, not 2%.
Why does this matter? Because consistency isn't just about the outcome, it's about the process. The more erratic your position sizing is, the more volatile your equity curve becomes, and that makes you hard to scale.
This rule protects both you and the firms. It helps preserve capital, prevent large equity swings, and make sure your edge plays out over time.
Think of it as your account heartbeat. If your position size pulls up and down, 0.5 loss one day, 5 loss the next, the system flags it. That's not structures, that's chaos.
This is where it gets technical, but stay with us. The term trade idea isn't just one order, It's a group of trades that share the same logic.
If you open 3 buy positions on Sol's USD Go at different times, that's one trade idea.
So because it's the same symbol, same directions, and close around the same time, even if you open them at different times, they are seen as a single unified position from a risk perspective.
So the system doesn't look at your trades in isolation. It groups them into logical bundles and applies the 2% rules across the entire bundle.
You can have multiple separate trade ideas as long as each one respects the risk limit.
For example, if you go long on gold, short on GBP/GBY, and short on AUD/USD, and each position has its own distinct direction and asset, those are 3 separate trade ideas, and each one can raise up to 2%.
Let's say you go buy on gold and you go buy again and again. You now have 3 open positions in the same direction on the same assets.
Yep, the system treats that as one trade idea, so if the combined floating risk or eventual loss from those positions is at 2% of your starting balance, boom, you are broken the rule.
Let's go hands-on. Suppose you have a 100,000 account. The 2% man risk per trade idea means you can lose more than 2,000 on any trade idea total.
So you open 2 gold buys, one lot each. You don't place the stop loss. New hits. Market drops 100 pips. Each lot losses $1,000. That's $2,000 total.
You're right on the line. If slippage or swap adds a few extra dollars, that's it. Rule broken. Account flagged or liquidated depending on the enforcement model.
And on some accounts, especially instant funding accounts with stricter tolerance, this breach may result in loss of funding status or immediate closure.
So here's some pro tips to stay risk consistent. Number 1. Set your loss size based on account risk, not emotion. Know how many bips equal 2%.
Tip 2. Use stop loss orders religiously. Set them based on risk per trade idea, not random chart levels.
Tip 3. Don't stack trades without calculating combined risk. Just because one position is below 2% doesn't mean 3 of them are.
Number 4. Label your trade ideas mentally. If you're entering on the same setup, treat it as one, size it accordingly.
Tip 5. If you want to split an idea into multiple entries, do it smart. Scale in smaller. Use micro loss if needed. Keep the total exposure below 2%.
And the most common reason traders break this rule, stocking multiple entries on one trade is thinking it's still separate.
Second, opening high-risk trades after wins, assuming they are playing with house money. Spoiler, the market doesn't care.
Third, neglecting floating loss. A trade might not be closed, but the floating rate still counts toward your 2% risk.
This isn't just policy, this professional practice. Hedge funds follow this, banks follow this, real traders follow this.
Exactly, we are not here to micromanage you. We are here to protect your account from capital and the integrity of this community.
And traders who internalize this rule, who understand that small consistency risk is the foundation of scalable capital, those are the ones we grow. Those are the traders who go from 25,000 to 1 million.
If you want to be a professional trader, you have to think this like one. And professional traders always know how much they are risking on every trade every day.
And if you are still guessing your loss sign or opening trade because the setup feels right, take this as your sign, step it up and get structure.
This is more than a rule, it's a habit. Build now, and about to bigger capital and larger payouts become way more predictable. And that, my friend, wrap up the 4 essential rules of trading at WeMasterTrade. Daily loss, maximum loss, profit consistency, and risk consistency. Master these, and you are not just staying compliant, you are building a foundation for serious capital management, long-term payout, and scaling. And before we wrap up in LiveStream, we will come to the last section, the financial news. Hayden, Raf, I hope you can share us some thought about the insight of the financial news today.
Of course, Vincent. So, hey traders, welcome back to the live market session. I'm Rob, and joining me today is Hayden. We are here to help you stay on top of the biggest economic driver and uncover some high probability trade setups.
What's up, everyone? Today's calendar is packed from ECB speeches with data out of Europe and Australia to key US trade data and multiple FOMC speakers. Let's dip in and make sure you are trading with an edge.
So, it's Thursday, October 9, and we got a super packed day ahead, full of FOMC speeches, key economic data from Europe and Asia, and several central bank updates. Where should we start today?
Um, um, s- so yes, today lineup is loaded with central bank activity. Let's kick off with the U.S. sessions. We are already seen several FOMC members speaking early in the morning. Logan, Kaskari, and Bars all share remarks, mostly reiterating the Fed's cautious stance. Traders are listening closely for any signals about when the Fed might finally start cutting rates.
Exactly, and around 1 a.m. we also had the FOMC meeting minutes, which gave us a deeper look into the last policy discussions. From what we have seen, it seems the committee remains split. Some members are still concerned about inflation, while others want to avoid tightening too much.
Right, and continuing with the US news, FOMC member Barr spoke again later at 4:45 a.m., but there weren't any major surprise. The tone remains consistent, keep rates steady until inflation clearly cools down.
Now, shifting over to the UK, the RICS house buy balance came in at minus 15%, slightly better than the previous minus 18%, showing the housing market might be stabilizing a bit. It's still negative though, meaning more survivors are reporting price decline than increases.
Meanwhile, in Australia, we had MI inflation expectations at 4.8%, just a bit higher than last month's 4.7%. That's an important number for the RBA because if expectations stay elevated, they will hesitate to cut rates anytime soon.
Good point. Then from Japan, preliminary machine tool orders jumped to 9.9% years over years. That's a solid increase from the 8.5% prior. It's a sign Japan's manufacturing sector is slowly regaining momentum.
And Europe also brought some positive data. The German trade balance came in at 70.2 billion euros, beating the forecast of 15.1 billion. That's another sign that the German export sector remains resilient despite global slowdown worries.
Look, lastly, looking at China, both new loans and M2 money supply were released tentatively. New loans surged to 1.46 trillion yuan, way above the previous 590 billion, suggesting stronger credit growth. M2 Monday supply slightly to 8.5%, but still indicate healthy liquidity in the Chinese economy. And that's the end of our news calendar.
Thank you so much for joining us today. We hope you found this session valuable and gained some new insights. Remember to subscribe, like, and share this session if it helped you. And stay tuned for our next one. If you have any more questions, feel free to reach out. Until next time, happy trading and take care.